Hey guys, welcome to my property investment channel over here in Dubai. Last episode, we covered how to invest. So if you've never invested in Dubai before, make sure you go and watch that episode. Very useful insights into everything you need to know before making that investment. And this episode, we're going to go through how to select the perfect property investment, what it entails, and I think you'll be really impressed with what I have to say. A little bit about myself. I was an established luxury real estate agent in the UK, selling multi-million pound homes up and down the country for 2 to 3 years off the back of a plumbing and football career before that. Now, fast forward over, since I've moved to Dubai last year, I handle overseas investments from landlords in the UK to investors over in Australia and America who have all reached out to me through my social media platforms based on the knowledge that I talk about. I have completely unbiased information when it comes to selecting a development. And on top of that, I give sound advice to ensure that every investment I have purchased has gone up in value. So rest assured, you're in very safe hands. I like to break this down into 3 different segments where we have a very established developer who's been here for many years, that has a fantastic reputation. The second option would be a new up-and-coming developer with a good track record of completing developments or being involved heavily in the construction industry in the UAE and Middle East. And the third one, and my least favorite one, is what I'd call maybe a high-risk developer, which I'll cover later on. So let's go through the more established developers. So without me listing names, I like to use Shoba, Emaar, Damac. These are, in my opinion, 3 very well-known developers out here in Dubai. So as investors, you need to know that when you're buying a property through these, they have a fantastic reputation of delivering the development on time and finish to a very high standard. And on top of that, they tend to go up in value more often than not. However, the main downfall that I find as an overseas investor is these developers, they will sell their units whether they put an attractive payment plan or not, purely because of their fantastic reputation. So what you might find, if you were to purchase a unit through Emaar as an example, they may ask for 90% of the payments during construction. Now, on my last video, I explained that during construction, the investment is not doing anything apart from taking money from you. So it's not generating you any income. So as an investor, even if the property valuation will go up by the time the keys are ready, you're going to be in for almost 90% of the amount paid during construction. Whereas other developers offer a bit more of a flexible payment plan. The reason these established developers do this is because their track record is so successful on quality of product and the fact that their previous developments have gone up in value consistently. So you're paying a slightly premium price with slightly more paid during construction, but you have that peace of mind to know that if you've done your homework on infrastructure and location, you are making a sound investment that will go up in value. What you find as well, when you have an established developer in an area where there is a less established developer, you may find the actual overall price will be higher. But again, it goes back to my previous point that they're charging a higher price, they're demanding more during construction because they're very confident, and you should be confident as a buyer to know that if you buy through this developer, the price is going to go up and you're not going to be out of pocket. So how to select the right tier 2 type of developer as your investment? So there's many things to consider, but some key factors are, although it may be a brand new developer, it might be their first project, their track record may be construction for the likes of Damac, Emaar, Shoba many years ago. So they have a wealth of knowledge when it comes to completing large-scale developments like maybe the one that they're offering now for the last 15-20 years. Although it hasn't been their name and their brand attached to it, they have maybe the main architects that have designed and constructed the building. That is very common in Dubai, as a lot of these new developers have kind of come from that industry where they were maybe subcontracted by the larger developers many years ago and now want to create their own brand and product to exactly how they want to do it. So to give you an example of this, a previous development that I sold many units on in Al Marjan Island, this was the developer's first development, but they have over 17 years worth of experience in the Middle East, completing over 700 projects with the likes of some very top tier developers in their portfolio. For me, these factors are very important. And also remember, I mentioned it on the previous episode, Your money is protected in an escrow account. These developers are not going to slip up because one mistake will tarnish their reputation forever and cost them lots and lots of money with DLD for late completion time. So don't worry, your money is safe regardless of which developer you go with through myself. What's most attractive about these is they tend to offer the best payment plans, which I'll cover later on in the episode. And tier 3, which I said the high risk type of developer. Now I'm obviously not going to name any names with this, but there is some red flags to look out for as an overseas investor. Listen up. If you've ever inquired with any developer on any website, your number is going to get circulated around and you're going to get bombarded with messages and amazing offers. So don't be tricked into just buying what gets sent to you. I've seen it time and time again. I got offered this amazing offer that was once in a lifetime, and it turns out they can't even sell it for what they paid for it over 2.5 years ago. This is very common. Now, a current client of mine who'd been out here in Dubai before I was even here made an unfortunate purchase through a developer that offered them a massive discount and said, don't worry, these are going to double by the time of handover. Fast forward 2 years later, they can't even get the same price they paid for it off plan over 2.5 years ago. So this is a fantastic example of everything that gets sent to you on Instagram, on WhatsApp is not going to be a good deal. You have to remember what Dubai is like. Everyone says they're a real estate agent, but barely any of them do any deals. The problem you have is everyone's got access to the development. So how do you know which one is the right one to do? Well, don't get attracted by price only and don't get attracted by the amenities. You have to look at the developer's reputation. And with this developer in particular, you should know that some of their previous developments have actually gone down in value from the off-plan price. And believe me, there's lots of these out there. So not every off-plan investment will be good for you. That's why you need an expert like myself who can run through the numbers with you. We can look at previous sold data of these developers and hand select a developer that's going to fit your payment plan options, your budget, as well as reputation, infrastructure going in, and location. As an investor, it's important that you take your time to select the agent that you want to work with, who's completely unbiased in the process, that puts your requirements first and doesn't favor just trying to get a smash and grab deal. Because look, this random guy that sent you this offer might not even be a broker out here. And is he really going to help you with the managing of it short let or managing the secondary resale? Or will he have effed off and disappeared out the country and you'll have no one to help you? These are huge factors that you should consider, and don't overlook these. So the second key factor is location. Everyone knows when it comes to real estate, location is absolutely everything. And I do believe this in a certain way. So when it comes to selecting the location, it all boils down to what are you investing the property for? So let's give an example. You want to purchase a property that's going to be a very good short let investment, generating you high rental yields. So there'll be high rental occupancy, as well as high demand for the majority of the year. Obviously, we know Dubai is very hot at certain times, so you may find that these times of the year, it may be very quiet and the property may be vacant. However, based on location, we can select areas that have a higher occupancy on a short let basis compared to other areas. So to give you an example, let's compare a studio apartment in Business Bay. It's going to have a very high demand for the majority of the year, very high occupancy, so it's going to generate you a very high rental yield on a short let basis. Let's compare that strategy to a 4-bed townhouse in a master community situated 40 minutes away that you maybe want to use for 2 months of the year. It's not going to have a high demand for a short let return. So you may find you might only have it occupied 30% of the year, purely because the demand for a 4-bed townhouse on a short let option is not going to be there. So depending on what your investment strategy is, and with an expert like myself, this is one of the first things that we will cover before sending you offers. I've had it time and time again. Send me what you've got, send me your options. Well, I don't know what you want. Do you know what you want? If not, let's have a chat and discuss and then narrow down our search. So location will be purely dependent on whatever your investment strategy is. So depending on what you're looking to achieve out of your investment will determine on the location that we select. Another key factor that's going to bring me on to my next point is the infrastructure going in around the location. After location, the major catalyst for property skyrocketing is infrastructure going in around it. Now, if you have any experience with perhaps looking at off-plan investments, every single brochure looks fantastic with infinity pools, paddle courts, and everything else. So taking that into consideration, the only other factor you should be thinking out apart from location is infrastructure going in and around the location. To give you an example of this, let's talk about Al Marjan Island, which you've probably seen all over my social media. In case you haven't realized, Tyron Ash International Real Estate are the top performing selling agents on Al Marjan Island. Me and my top agents know exactly what this place has to offer. So if you are interested in the hottest investments in Al Marjan, make sure you reach out to us on this. So everybody knows that the world's largest casino is going to be situated on this island. Major infrastructure going in around other developments. So the way you need to look at this is, if you own a piece of real estate on the island, you know full well that Dubai and the UAE are going to market this to the hills and back internationally. There's going to be a huge media frenzy all on this infrastructure going into this location. So as you can imagine, when the media frenzy happens, the infrastructure goes in, the demand for people coming to visit the casino and be around the casino, to come on holiday, to come and visit, is going to skyrocket. So when you take these factors into consideration, it's going to drive tourism and visitors to this area, who in turn are going to want to stay somewhere and visit somewhere, which means if you own a piece of property here, you can generate mad high rental yields because the demand for people visiting that area is going to go through the roof. So let's look at it from another angle. You purchased a fantastic development in the middle of nowhere where no one wants to come and visit. So how are we going to have a high rental yield? Why is there going to be a demand for an end user to come and purchase a property there when the closest mall is 25 minutes away? It's not going to happen. So don't get drawn into the fancy brochures without doing your research on major infrastructures going in. Another major infrastructure going in is Al Maktoum Airport, which is going to be the world's largest airport. If you imagine Dubai now, it's at 3.8 million residents. By the time Al Maktoum Airport is fully up and running, we're looking to have this doubled close to 7.5 million residents. So it means that if you own a piece of real estate close to the airport where people will be using it back and forth very, very regularly, you know you're going to have a high demand for people wanting to stay in the property, whether it be long let or short term let. You have many, many options. So when you're selecting your development or property in and around these major infrastructures going in, it's going to drive the price up in your area. Another example of this is the new metro line going into a master community that may be a 40-minute drive to downtown, but the new metro line will take you there from 5 to 10 minutes long. It means that people won't have to pay the prices to live in downtown to work there. They can jump on a 10-minute metro line, and it means that it's going to have greater connectivity to all the major infrastructures in Dubai. To give you an example of this, when I was operating in London, many properties that were on the Elizabeth line that went in on the underground shot up by around 20%. This is what infrastructure does to owning property in these areas. And the last factor is payment plans. I briefly touched on this in the first section when we were talking about developers, and payment plans are what is going to be the massive final factor for you to decide what to invest in. Payment plans are structured differently between each developer. Remember, tier 1 developers, they demand a lot more during construction, up to 90%, and you may find tier 3 maybe only ask for 30% during construction. Not to say that the tier 3 developers will not be at tier 2 and tier 1 one day, but make sure you're looking at everything before making that assessment. Don't just buy purely on a payment plan, because I promise you, without doing your research and without an expert on hand to help, you could regret that decision. And we're talking thousands of thousands of pounds here. So for me, examples of payment plans will depend on what you're looking to get out of your investment. So let's give an example. My client, Mr. A, wants to buy a property that's going to generate a high rental yield with a very flexible payment plan. So as an example, he will purchase a property on a 50% payment plan. He can afford X amount each month, which we'll discuss on the initial call, as well as his down payment. So once we have these factors considered, we can then make a decision on what our budget is. Remember, if you have £300,000 in the bank, it doesn't mean you have to spend that all on the property itself. because it may be that the payment plan is structured in a way that £300,000 could get you a £500,000 unit based on the payment plan. So Mr. A, he's found a property on a 50-50 payment plan, but he's concerned that he won't have the 50% to pay on handover. Remember, the developers, when the keys are ready to be handed over, they usually ask for the full amount in one go. The property can be mortgaged at this stage, but let's say Mr. A was ineligible to get a mortgage. How do we select which payment plan to go with the right development? Some developers offer a post-handover payment plan. So there's no credit checks done with this developer. Once you sign up to commit to it, it's your responsibility to see it through. So come handover, Mr. A doesn't have to pay a penny out of his own pocket. The rent he will generate from short letting it will pay off the developer and leave him with a small profit, or hopefully a large profit if he's made the right investment. But these developers offering these payment plans are very, very appealing, not only to yourself, but if you were to sell it before handover and flip it, as we call it in Dubai, then the investor purchasing it from you is going to pay a premium as he can get a mortgage, and it also means that he could carry on the payment plan if there was a post-handover payment plan. To summarize payment plans, the key things to consider are: what is your down payment, which would be the 20%, the 4% DLD, and the admin fee, and what are your comfortable monthly amounts for how long? Remember, whatever you have saved up doesn't mean to be the total value of the property. We can find a development that has a perfect payment plan that suits what you're looking to get out of your investment. So the 4 key factors to make the perfect property investment: remember, which developer is it going to be? Is it a tier 1, 2, or 3? The second factor is location, which everyone knows is so important in real estate. The third factor is infrastructure. A lot of people overlook this and get drawn in by the fancy brochures. And 4 is payment plans. How much money are you safely going to invest and feel comfortable with? Can your money go further than you initially thought with the right payment plan, with the right developer? And remember, don't forget to like, comment, and subscribe. I'd really appreciate it, as I'll be giving you constant updates on how to invest, the right investments, and just useful information that you'd like to know as an investor.